Which one's the best crypto asset? Well, Bitcoin's the best crypto asset. Okay. What's the second best? There is no second best. There is no second best crypto asset.
Hello, friends, and welcome to the Why Bitcoin Show. I'm your host, Dale Warburton. It's a weekly podcast on why Bitcoin matters and what makes it completely different to all other cryptocurrencies. If you're interested in Bitcoin and you'd like to distill crypto fact from fiction, you've come to the right place. All right, I have got JP Baric from the mining store. He's the CEO over there, and I'm really pleased to say, JP, you are the first transatlantic guest that I've had on the show, so welcome.
Hey, I'm excited to be here. An American representing Texas out here.
There we go. Yes, stoked to chat to you. We spoke a little while ago, and I was really interested to get your take on all things mining, because mining is one of those areas that are, at least from a noob's perspective, very misunderstood. And it takes a lot of work to kind of unpack how mining works, what it's all about. So that's really kind of where I see you can bring a ton of value today. Perhaps just kick off proceedings by sharing a little bit about your background, because I also am aware of the fact that you were on the Dr. Phil show. So talk to us a little bit about that too.
Before I was on Dr. Phil, I started learning more about Bitcoin when I was a freshman in high school. And so that's was 2013, right around 15 years old. And to me, I was in robotics and Lego robotics before. And so I really liked the idea of building computers to print money. And that's where I got excited. And then I started playing around with the GPUs, mining Litecoin, mining Ethereum, buying my first ASIC from Butterfly Labs, waiting years for that to come. And then eventually GPU mining at a larger scale, and then Bitcoin mining at a larger scale with S9s and S19s, some Bitmain devices. But Dr. Phil was because of a viral TikTok video that explained my story of me buying Bitcoin at $70 a coin back in 2013, when I had to use my mom's passport to go make an account at Mt. Gox, which was one of the first crypto exchanges that changed from a Magic the Gathering card exchange to sell Bitcoin. And so I go to her, I'm like, hey, I need to make an account because I'm not 18 yet, and I need to buy these things called Bitcoin. And she was so confused, but just kind of trusted me and let me go with the flow. And next thing you know, I acquired 20, 30, 40, 50 Bitcoins by sending money from my robotics camp I had at a young age to Mt. Gox, and then it's showing up with the wire, and then be like, I can now buy Bitcoin. So that was my experience in journey into this space. Not as easy as it is now, just on Cash App or PayPal. And I was just stuck in this reality that Bitcoin is going to change the world, and started preaching that at such a young age and sharing that to everyone I met, and was really addicted to the idea that Bitcoin could solve the Byzantine General's problem, which was a horrible way to explain why it was important to people, but it was exciting as I was a high schooler.
Brilliant. Okay, so while you mentioned the Byzantine General's problem, just tell us exactly what that is. Because I agree with you, that means nothing to 99.99% of human beings.
So the Byzantine General's problem is a fundamental problem of trust and without communication and communication. So it's what makes Bitcoin as a blockchain. It solves this inherent trust problem. That's why you might have heard of it. It's called the trust network. And the problem that the Byzantine General problem discusses is, if you have a bunch of generals, let's say 9 generals around a castle, and if one of those generals attacks, he is going to die. If 8 of those generals attack, he is going to die. If all 9 attack, you have consensus, and they're all going to live. And so what happens is you only have my word and your word as a general saying, yes, we're in, but you don't have a way to get everyone to have consensus at the same time. And so there was no way to solve this problem online. And there was no way to get consensus from every single party without having them invest something into this problem. And so that's where proof of work comes out. It comes together is you have to invest energy and resources to solve a block, to prove that you were the general that went in and you solved the problem with everyone else. So every 10 minutes, the Byzantine General's problem is being solved with mining a new block of Bitcoin. And we're all saying, hey, we're willing to work in these 10-minute periods. When we solve a block, we're willing to move on to the next block, and all agree that this block was valid. Effectively, all agree that the castle was captured, and it makes sense to move on to the next castle. And so that a way to generate consensus across a network by using scarce resources, like by using energy, by using intrinsic resources that cost money, made Bitcoin a fundamental breakthrough in money creation, one that was created through the POW process, or proof of work process, through Bitcoin mining, and that wasn't created by a central authority like DigiCash or other type of digital currencies that we had that end up getting shut down because they did have a CEO, they did have a ruling governmental, a ruling organization behind them, where Bitcoin was truly anonymous and decentralized.
Yeah, I think I'd love to just go a little bit deeper on that, because a lot of people just think Bitcoin was created out of thin air, but what few people realize is actually it was the latest iteration in several that had failed, and it simply had managed to use blockchain as a mechanism to decentralize the creation of money. Talk to us a little bit about the importance of proof of work as opposed to proof of stake in your mind.
So proof of work is going to be a physical manifestation of real work. When we think about work, you can be a consultant, you can do work, you can be a healthcare worker, you can do work. But if we had to break work down to the fundamental value of work, it's using energy. It's creating and using energy. And so Bitcoin builds on this principle that a measurement of work, an electron coming into a Bitcoin miner, is a fundamental building block of human life and of society. And that energy goes into a computer, which does, let's say, a hash function, or as I said on Dr. Phil, a math problem. And it does these hash functions, and they're able to basically calculate the height of the block, almost like the height of the castle walls, right? And the higher the walls, the more people trying to get into the castle, the more miners trying to get the gold inside. And every 2 weeks, the Bitcoin blockchain says, hey, there's more people jumping over our walls to get our gold, the new Bitcoin that's being created. What we need to do is we need to extend the height of the walls, and it gets harder. And so it's this never-ending game of people deploying more infrastructure, more machines, more specialized computers, using energy and staff to keep them running in order to always collect these new Bitcoins that are created from the Bitcoin protocol, which is this proof of work. So it's, like I said, it's not a company, it's not a central authority, it's this protocol that comes from the nodes that are running the software across all the Bitcoin blockchain. And that's another way to look at it, is like you have three government systems. You have the miners, you have the nodes, and you have the developers, all which provide consensus mechanisms and way to regulate the protocol to ensure that one party is not too powerful, being the miners, the nodes, or the developers. When it comes to proof of stake, you just have the nodes and the developers. And so when you deploy a node, you're not building physical infrastructure. You're not consuming insane amounts of energy. You're not cooling data centers. You're not running 24/7 in these, in these massive operations. You can run nodes on an AWS server, on a Microsoft server, on your computer server in POS. And so the distribution, the decentralization is not there. And it's very easy to spin up servers, and it's very easy to acquire coins versus building out a massive data center to mine Bitcoin, which is hard to do, which gives it more security and proof of work. Also in proof of stake, you're just back to the interest rate system that you have in a normal bank account, where if you have 1 ETH or you have $1, you're going to get X% interest every year. Where with Bitcoin, it levels the playing field, where the same thing applies to a consumer, a business, a nation state. They all have to use this input cost of energy to do these hash functions to create new Bitcoin. So that's why I like proof of work over proof of stake.
Love it. The way I describe it to people is that proof of work is a way of tethering the creation of new Bitcoins to reality. Otherwise, if you contrast that to proof of stake, it's more of the same. It's fiat, but by a different name, if you like. It's political money. The supply can be adjusted based on the whims of those who control, and ultimately, it's not decentralized, as you pointed out, because in reality, you need 32 ETH to actually run a node and a ton of hardware that the average person just can't get access to. Being the show that it is, called the Why Bitcoin Show, I'm interested to get your take on why Bitcoin and not the 30,000 alternatives.
Well, it helps when you've been doing this since 2013, because when you're getting started, the possibilities are endless. All the marketing is out there. Everyone has their roadmaps of how they're going to change and implement blockchain, and they're going to track these files, and they're going to disrupt this industry. But then you realize that those people get distracted, that a lot of it's marketing, that a lot of the technology that people are promising never end up being solutions. And so you realize that why do we need to put things on a blockchain? Well, we don't need to track things that aren't on a blockchain. And Bitcoin, the reason why you have a blockchain is to track only the things on the blockchain. And, we've talked about, blockchains can be used to track, logistic items across a Walmart chain, or let me know what's in my Starbucks. But the reality is, it's like those purposes and use cases don't function well on blockchains. And so when you look at Bitcoin, you're looking at fundamentally scarce money. You're looking at a way to create and decentralize trust, at a way to create a store of value, or a store of value that was created that's programmatic, like you said, that has no politicians or small groups of developers that can change the code. No, it is a monolithic structure that'll continue stacking block after block, no matter if it's a Wednesday or if it's electing a new president in the United States. Bitcoin network does not care, and it doesn't care where your nationality you are, what color you are, what your beliefs are. It's just here to provide you a value network, a way to transact value without asking permission, just like the internet provided us the opportunity to transact information and send information across the world without asking permission of intermediaries. So then you begin to realize that those projects that you were excited for, that you might have invested in and sold your precious Bitcoin for, they don't actually turn out to be what you were hoping for. And they usually fail, and they usually become dead blockchains. And there's thousands and tens of thousands of these dead blockchains. And the one core blockchain that stays around is Bitcoin, because it's not about what is Bitcoin going to do in the future. It's about what Bitcoin already solved. What problems did it solve, which is scarce money, which is the Byzantine General's problem. And that's the reason why Bitcoin.
There we go. Amen. No, I love it. Absolutely. When you look ahead into the future, what do you see happening with all the other blockchains? And do you also subscribe to the view that those blockchains are currently being used almost as a test net for what will ultimately be relayed across to Bitcoin in due course?
I don't necessarily know if I believe that Bitcoin will adopt some of the other scripting technology that other blockchains like Avalanche, Ethereum, Optimism have. There is value in the chains that are created when it comes to the let's say DeFi chains, and there's value being created, but it's value where you lose that sense of custody of like, I own this Bitcoin and it's mine and I can prove that. I now begin to trust intermediaries. And so the farther you get away from the Bitcoin blockchain, you're gonna have to trust these intermediaries. Yes, Bitcoin is moving slow. Yes, it always will move slow in its development. Yes, it could adopt some things, but I do think that with Lightning Network, with other developments on Bitcoin and layer twos, we'll be able to have similar type of, let's say, collateralization of Bitcoin. And I believe it's already there to collateralize your Bitcoin on L2 and to be able to take loans against it and do things that you can do in DeFi today on Ethereum and Avalanche. That is a little bit hard to do in Bitcoin, but with Bitcoin, it's just moving slowly in the right direction and knowing that it's not here to add features because it already is a feature in itself, is what I would say.
Yeah, 100%. Yeah, it is what it is right now. It does what it does exceptionally well, and it is designed intentionally so that it doesn't break, because it solves probably one of the biggest problems we've had, which is unsound money. So yeah, we're singing from the same hymn book in that regard. Now, I'd love to just dive into a little bit of mining talk, because I know you're the CEO of the mining store. Talk to us a little bit about, perhaps first with that, what is the mining store all about? And then we can dive into some of the mechanics behind mining itself for those who perhaps don't quite understand how it all operates.
So the mining store is about providing access to cryptocurrency, or Bitcoin mining specifically, to investors all over the world. And we do that through 3 to 4 programs. The first program is what we call BitVault. And this uses something called the Reg CF crowdfunding framework in the United States, which allows us to solicit securities on TikTok, Instagram, and other areas. So we work with influencers to create a mining SPV, or special purpose vehicle, that buys Bitcoin miners and runs them. And so then as an investor, if you can't buy a full miner that's $1,000 or $4,000, you can own a share in a company that just owns Bitcoin miners, has fixed general admin costs, and is going to run miners for a set period and then distribute the Bitcoin or distribute dividends on a yearly basis. And so we work with influencers. The first one we worked with was with Josh Terry. He raised about $625,000 from fans across Instagram and TikTok. And then we bought 50 S19s and 50 S19 XPs to run at the facility and have stacked about 5 Bitcoins. Now, those 1,000 investors all are going to get a distribution in 5 years. Because one of the biggest regrets that I had early on was selling some of that 20 Bitcoin that I mined when it hit, $1,000 versus really holding it. And so in order to give people the idea of like, hey, it's your coins, you're legally, they're legally yours, but we're not going to pay them out until 5 years, so that this appreciation and these assets, you're not just going to go and sell and lose that Bitcoin. And so we put together that program. It's called BitVault, and it's working with influencers to do Reg CFs. And so that makes it so we don't have to hire a bunch of support staff. We don't have 1,000 customers for, one machine each giving us a call and emailing us. It lets them collect their money together and invest in groups. The second program we have is something called Managed Mining, which is a partnership where we lease back the machines. So the customer owns the machines. We lease the machines back from them, and then we manage those machines on their behalf. And we take a fee similar to a mining pool based on the performance. So it aligns our incentives. When the price of Bitcoin is low and the mining profitability is low, you have energy at cost. So your energy bill is going to be low. You're still going to be stacking sats. But when the price of Bitcoin goes up and you're becoming more profitable, we get to share in that upside because we get a percentage of your profit in the Bitcoin. So it aligns our incentives with mining store, and we're long Bitcoin as well with you. And then the third opportunity is hosting, which is traditional investors who want to own their own equipment, usually deploying 100 to 500 servers, and they don't want to give us any Bitcoin upside, which means we just price our energy and our services higher. We provide them our co-location services, and they then run in our data centers. And the last one is our Build a Mine group. These are family offices. These are hedge funds that want to own their own infrastructure. They want to own their own land, their own storage containers, their own mining units. And we set up these facilities for them. We deploy them and we run them across Iowa and help them through that process of collecting sometimes tax-free Bitcoins in special zones in the United States and across the US, where cheap power is abundant, in Iowa specifically. So that's the mining store and the 4 products we have. And the second question was...
Well, let me jump into that one there, JP. So there's a lot there. Okay, so talk to me a little bit about, let's say, the advantages of, let's say, a retail investor buying with the first offering you had, where they are collectively pooling their asset or their resources and then buying a bunch of miners. Talk to me about the advantages of that relative to, say, buying shares in Iris Energy or Riot or Hive or any of those.
Yeah, great question.
Tell me about that.
So the biggest difference there is that this investment contract or this security, what you're getting, and then as management, we're defining what the costs are going to be. So that's the biggest difference between us and a pubco. We're not issuing debt on top of your equity. We're not going out and issuing more shares. Each SPV, each influencer, each Reg CF, every BitVault has its own offering, and there's no more shares issued. So there's no more dilution. There's no corporate expenses. There's no private jets, like Core Scientific being had the most private jets out of any public company last year, in expenses. So none of that is created. None of those issues are caused. There's no legal fees, in excess of hundreds of thousands of dollars. There's no auditors that are going to be crazy expensive. There's no general admin. There's no HR cost. So we focus on machines, insurance, and energy bills. That's where the money goes to. And we're very clear with that. And then we track everything on chain once the coins are mined. So that's the difference between these SPVs and a pubco. You have liquidity after 1 year in a Reg CF. In a pubco, public company, you have liquidity immediately right when you buy that share. You can get dividends in both. Both companies will pay out dividends. But what comes down to is what type of representations were made to you when you bought that share, and what agreement do you have that the officers or the board of the company is not going to go in and spend this money frivolously or buy machines at a higher price, which is then going to take your machine purchase that when you bought the share when they were really in a good situation and make that less of a less of a good position or a worse position. So that's how we're different than pubcos. Yeah. And it's a great question.
Yeah. All right, cool. And then looking at, let's say, whether it's the family office or high net worths and that sort of thing. And then you obviously got different sort of offerings. The one where you're actually finding the facilities and you're finding the land and the energy and all that jazz. And then others, you're just saying, look, we'll provide all the infrastructure and manage it on your behalf. Talk to me a little bit about the advantages of that relative to just buying Bitcoin. Like, why are these folks interested in Bitcoin? Because I think as an individual here in Australia, we tend to say, at least relative to the cost of the energy inputs, the main advantage of mining is really KYC free Bitcoin. Beyond that, it just doesn't stack up. You may as well just go buy it on an exchange.
It's a great question. So there's two reasons why investors buy Bitcoin miners and build Bitcoin mines. The first reason is going to be because if you have a low cost of energy, which we do in the United States, in the Midwest especially, those Bitcoin, that cost of energy, and then you add depreciation and you add the cost of your asset, is going to be less than the price of Bitcoin today. So you're still collecting Bitcoin for, let's say, mining it for $15,000 a coin, selling it for $30,000. So you have a discount there. The second advantage, which I highlighted, is depreciation. It's the tax advantages. So if I have a tax liability next year of $1 million in the United States, I can decide, okay, I can go and buy $1 million worth of Bitcoin, but now I still have an asset. I still have a tax liability of $1 million, and I can't depreciate a Bitcoin because it's not a physical asset. But if I went and buy $1 million worth of Bitcoin miners, I can take depreciation on that computer, and then I get tax incentives of $300,000, let's say, every 3 years. There is something called accelerated depreciation where you could depreciate the whole asset in that year. So then I reduce my tax liability from $1 million down to zero. And now I have these mining machines, which are producing me not KYC free Bitcoin, but Bitcoin that I would have paid, dollars I would have paid the government, are now going into Bitcoin mining devices. And it gets even better because if you can find the right areas in the United States, there's something called special economic zones that were created by Donald Trump in his presidency. These are areas in the Midwest and across the US that lost their manufacturing in rural America. And so these areas were selected as a way to incentivize businesses to come in and build facilities, build data centers, build, storage centers, build shipping centers, build production, manufacturing back to the US. So if you build a Bitcoin mine in one of these areas and you hold that Bitcoin for 10 years, you don't have to pay any capital gain taxes on when you sell the Bitcoin. So if you mine it for 30,000 and Bitcoin in 10 years is at $3 million, you pay no tax on the sale of that Bitcoin in the United States,
awesome.
Which is huge. So there are a lot of interested family offices who don't like paying taxes that want to mine Bitcoin in these areas, and they're putting money into poor, economically depressed zones in the middle of the Midwest. So it's a win-win for everyone.
That sounds great. I mean, often people talk about that sort of thing as tax evasion, but I say that's tax avoidance and that's tax planning, which is legal. Tax evasion is the illegal version. So I think that's super smart. And I had never contemplated that as something that could happen. It's not something that I've seen huge here in Australia, these sort of special economic zones that have all sorts of tax incentives. But I know coming from South Africa, you'd have these sort of city fringe suburbs that were really, really impoverished. And they had similar incentives for developers to come in, because otherwise it doesn't actually, the free market is just not that interested unless you're going to dangle some sort of carrot in front of them at the end of the day. That's a great sort of assessment of what you're up to there. Let's dive into a little bit of Bitcoin mining 101, because as you said earlier on the Dr. Phil show, it's solving a complex mathematical problem. And then you'll have Elizabeth Warren kind of spouting off, what's the point of all these mathematical problems? It's wasteful. So I'm going to start with a sort of something that I heard recently, which I thought was really smart. It says that Bitcoin doesn't waste energy. It consumes wasted energy. So using that as a kind of framework, just let's start from first principles as to like, all right, the ASICs, the actual mining infrastructure, what are they actually doing, just for the layperson in the simplest of terms, that is accurate, not just solving a maths problem?
So the computers take one input in, which is electricity, which we've mentioned. And this electricity needs to be stepped down to a correct voltage, just like when you plug in your computer in an outlet here. In most mining facilities, we use something called 240 volts. So you plug in the electricity, which has been stepped down from a substation to a transformer, the big electrical green boxes in the United States, to something called a switchgear unit, which is like your breaker box at your house and your home panel with all the one individual breakers in, to something called a PDU, which is a power distribution unit, which you can think about that as like a big power strip, to then a cord, to then the Bitcoin miner. So the energy has to step down all these little routes to get to the unit itself. Now, inside the unit, there are 3 hash boards, and each hash board has a bunch of computer chips on them. These chips are called ASIC chips. which stand for application-specific integrated circuits. Each one of these ASIC chips were built and only can do these hash functions. So they can't load a Windows screen. They couldn't play Minecraft for you, for example. All it can do is do these hash functions. And so you have 90 chips on one board, and on each board you have a heat sink. And basically you have the energy go through the power cord into these hash boards. About 90% of the energy goes into the hash boards. And these ASIC chips are just running hash function after hash function, which is jumping over that castle wall, trying to solve this math problem and this hash function and get higher, higher, and higher. And if one does solve the hash function, then it wins a Bitcoin block. And that one device pays out usually in a pool. And so a mining pool is a collection of devices around the world where, in order to join together and get steady payouts, you put your miner, that you plug it in and you mine towards a pool or a Bitcoin network, the Bitcoin network yourself. Most people mine towards a pool because then whenever someone in the pool gets a block and they collect the reward, we all get paid out together. And so what we're doing is every device, every chip is doing these hash functions. And the only output is heat and noise. So we have fans on the back of it. There's no liquid coming out. There's no toxic chemicals. The only thing that's coming out is heat and noise from the back of this device. And the only thing that is being produced and being sent to the internet through the Ethernet cable, which is, how you move internet around, is going to be those shares, which go up to the pool and say, yes, I'm still working on Bitcoin mining here. Yes, I'm still kind of trying to contribute to the Bitcoin mining problem and solve it for the team, for the pool. And so each device is running 24/7. And if a device goes down, a technician is notified. They take the device off the shelf, they clean it out, they replace a fan, replace a power supply, and then they put it back on the device and they plug it back in the wall, and it continues to run. And there's tens of thousands of these devices in facilities across the world. And it may be even in your neighbors' houses, and maybe one or two of them. And so depending on how many machines you're running depends on where they need to be, if it's a data center or if it's just a house.
Okay. All right. And, you touched on it earlier, but let's just sort of knock it home, this point of, why does it have to consume energy? Why can't you just hashtag change the code, JP?
Hashtag it won't work. The reason why, you just need a fundamental building block of what is work, right? That's the definition we're trying to come to. And we're trying to make it equal for every single person and make it verifiable. And so this does that. You can do a Bitcoin mining hash function without energy. You can do it with a pen and paper. People have done it on YouTube. So you don't need necessarily that type of electricity. You're using a different type of energy, using your own body to compute this work. So the fundamental problem, this hash function, requires a significant amount of compute. It's just constantly doing it because you're always trying it. And every second, a new hash function is being done. If you do it by hand, it's going to take you like maybe 12 to 15 minutes to do one hash function, where the newest Bitcoin mining devices will do 151 trillion hash functions a second. And you can't compete by hand, right? So that's where we are today, is that the technology has gotten so good that you were running on a computer, and that computer was, it could do the math well, but it wasn't built to do the math. You ran on GPUs and FPGAs, which are, graphic processing units that we hear a lot about in AI. Those can do the math, but they can't do the math well. And then we have the ASIC, which is dedicated to doing these hash functions and does them does them out tremendously better than anything else. And it's gotten more efficient. So the amount of energy inputted to the amount of hash functions outputted. When I got into Bitcoin mining, we were at 120 nanometer chips, which means the size of the chip and the gates between the chips. Today, we're at 7 and 5 nanometers. So it's gotten magnitudes of more efficient. And to answer your question of why do we need energy in the first place, it's the old tale of, if I have a bunch of concrete blocks on one side and I move them over here and then I move them back and put them in the exact same spot, did I do any work? And the answer is no, you didn't do any work. And so we're trying to figure out a way where, how do we prove people did work across the world when there's no way for us to monitor them, for us to make sure that they're turning in their homework, for example. This is a way that computers can turn in homework effectively.
Yeah, that's what I tell people. Like, to echo a point I said earlier, it's the only way that you can tether the creation of Bitcoins to reality. You can either go buy it on the free market or you can go and mine Bitcoin, but there's no other way. There's no, and that in that sense, it's equitable and it's fair, whether it's individuals, it's companies, it's nation states, it doesn't matter. And that's why it's fundamentally important. I'd like to talk a little bit about now some of the innovation we're seeing in the mining space. One of the things I've seen is how Bitcoin mining through companies like Gridless are able to help subsidize infrastructure. Talk to us a little bit about how I guess the relationship between Bitcoin mining and how it is able to provide electricity infrastructure for rural communities across the world.
So when we think about infrastructure, we know that it's very important to see usage and to understand what's the usage of this asset. So when we're building out any type of infrastructure, like a toll road, for example, we're going to figure out how many cars are going to run on that toll road every day. And the reason being is we want to say, okay, what's the amount of cars we can amortize this asset over a set amount of period? So Bitcoin mining, you have this amazing principle where you can amortize these electrons faster than if you just had a small community using the power to power their, their day-to-day homes, their refrigerators, their microwaves in Africa, where I think Gridless had their project, or at least one of them. And so these opportunities to amortize over millions of electrons and to do it faster provide the ability to get the cost back of the infrastructure and lower the actual cost of the infrastructure to the community. Because Bitcoin mining is a flexible load, it can be turned off when other people need the energy. When the community, let's say, wants to go and work in the mornings and in their machine shops, there might not be enough energy on the grid. Well, the Bitcoin miner can turn off, wait for them to go home, and then turn back on automatically. And so it's going to let you send more electrons through the substation, through the dam, through the natural gas generator, and use those electrons so they're not just being wasted in heat. They're actually being used to produce money or to produce Bitcoin. And so that's on a rural level. But then even when it comes out to rural Iowa, where we're working, these substations are being paid for by members of a community who are investing in the electric cooperative, and they're members, they're customers, and they also are owners. But in order for them to lower their energy cost, they have to consume more energy as a group, because they have fixed costs such as general admin, fixed costs, fixed loans, where if they're not using energy from these substations that have, let's say, 10% utilization, then they're missing out on the ability to amortize that substation faster because every electron you sell, the next electron is going to become cheaper for the community to use. And so that fundamental principle about amortizing assets is what makes Bitcoin mining so unique, is that it can come there, can be in a rural area. It doesn't need fiber connection. It can run off a Starlink device, and it can be good. And you don't need complicated setups like you do with a normal data center.
Yeah. Perhaps as I sort of go down this path a little further, one of my favorite sayings, and I've written about this in the past, is Bitcoin is a buyer of like first resort and last resort. When I think of the sort of first resort, it's the example of, let's say you've got a rural community of, say, 500, and they might have a river running through it where they could actually create some hydroelectric power, but the costs of doing so are pretty intense. So then what the government or whoever the local authorities can do is just partner up with Bitcoin miners in the sense of saying, look, you guys, at least we know that we can have somebody who is always going to be buying electricity from the outset. And that can also be used to sort of fund the initial capex to get the project going. By the same token, something that happened, I believe, in Texas was, when you've got a grid that is under pressure where it was really freezing at one point, the Bitcoin miners were able to come off. And so it is that sort of, tell me, is the term here, it is a flexible demand response. Bitcoin is kind of a unique way of monetizing wasted energy that would otherwise not be consumed during the day. And then they can switch on and off as and when required based on the needs of the actual electrical grid.
You're exactly right. It's demand response and operating reserves. And as a Bitcoin miner, it's pretty interesting. So we can go through the 4 ways we're getting paid, or when we're using energy. So when we're using energy that's either low priced energy that, let's say, people don't want, and it's like middle of the day or morning, and it's 3 cents to 5 cents a kilowatt hour. Then there's a time when we're turned off because the energy prices are too high, or because it's carbon, there's a lot of carbon emitting sources like natural gas and coal plants making energy when everyone else needs it. Well, Bitcoin miners are turned off then because that's when the energy is the highest, and we can't afford that energy because we have a cap on the price that we'll pay for energy. And then there's times where the energy price is negative because the government has funded renewable energy companies that are generating energy with no fuel, which means they have no cost to run their assets. And they're getting paid for federal tax credits here in the United States up to $25 a megawatt hour, which means that the price of our power can go negative $25, and the energy companies will still spin their wind turbines, will still turn on their solar, which means as a Bitcoin miner, we're getting paid to mine Bitcoin from the Bitcoin network. And the energy company is saying, hey, take our electricity, we'll pay you. So you can go and like have this double whammy scenario where not only are you getting paid for Bitcoin from the Bitcoin network, but you're also getting paid to use this energy. And it's going to unlock, this opportunity for everyone in the United States because the grid is becoming more electrified, more modular, more open. And I hope in the future that every consumer has the same access we do to managing their power needs, where they could potentially get paid to use energy as well.
Yeah. And what I think so fascinating is I think I'm correct on this, but tell me if I'm not, is that up until Bitcoin, there wasn't actually any use for that negative energy, in the sense of like, what else would you be using that energy for in the middle of the day when it is priced negative? I mean, that the market is illustrating there, like, hey, this stuff isn't valuable, and the Bitcoin miners are the most ideal customers for that. I mean, is there any other customer that would otherwise be interested in, or is that one of the things that makes Bitcoin just so unique?
It makes Bitcoin so unique because we are a massive load in a small area. We're saying we're going to take 5 megawatts of power, which is almost like 8,000 to 10,000 homes worth of power. And we're going to do it in 1 acre of land. So the density is insane. And as a manufacturing process, it doesn't take tons and tons of energy now to manufacture things that we manufacture in the US. Big data centers, they're great, but they can't turn off at those peak hours. And because they have critical applications they're running. And so they are getting better at when they turn on their processes that take a lot of energy and when they turn off those and managing those throughout the day. But Bitcoin miners are so unique that if we can go to zero or very little energy, and it won't dramatically affect our business because we're getting paid for every minute we're mining Bitcoin. And if we're off a little bit, it means we're doing it because we're economically incentivized to, and we're reducing our impact because, like I said, that's when highest carbon output is happening on the electric grid.
Yeah, absolutely. And what's really interesting is when I talk to people as well, and this is again just sort of casuals who aren't necessarily in the space, they have this view that somehow Bitcoin is competing with residential properties for energy, and by being a massive consumer of energy, it's necessarily making the consumers' costs higher. But that would be a misnomer according to what you're saying, in the sense that, I mean, the costs that one would have during those hours, whether it's the beginning of the day and the end of the day when consumers are typically using it, is much higher, and it's uneconomical for Bitcoin miners. So they're really only coming in when the costs are really low and the demand is really low. That makes perfect sense. Yeah, okay. I'm happy with the way you sort of unpacked it. And I think it's a really interesting way of looking at things. Tell me now what your view is on sort of the hash rate, obviously being I guess a function of the amount of computing power that goes into the Bitcoin network, which we've seen just grow and grow exponentially over the years. And as we've seen more and more assets come online, talk to us a little bit about what you think the relationship between price is and hash rate, because some people think that sort of hash rate precedes price. What have you seen since you've been in the game?
So I would say that hash rate really doesn't care what price is doing until there's a breaking point and there's blood on the floor per se. And there's the Bitcoin mining space is you're running your machines until they become not profitable, and everyone's doing that across the board. And so we only see hash rate really drop 2 times in the 4-year cycle. The first time is going to be when the price of Bitcoin goes up and then starts to come down and has our crash, let's say going from 60,000 down. Now, Bitcoin hash rate is still going to be continuing. Why? Because when we make infrastructure investments, we're doing it on a 6-month horizon. We're planning out for 6 months. We don't know when that price of Bitcoin is going to crash, per se, when the price is going to go bull and go crazy and come down. And so we're still deploying infrastructure because we still have sunk costs, and that's across the whole network. And so at some point, the price is going down, more hash rate is being added, and the network hits a point where it's becoming so unprofitable to mine that people are shutting off their machines in masses. And usually that's going to be right around the same breaking point for a lot of people, where they have the efficiency of their machine and the version of that machine plus the energy costs around 4 to 5 cents, and they're going to start having to turn off. And that's when we see the hash rate start to crash. The second time we see hash rate crash is when the halving event occurs and we lose 50% of our profits from mining Bitcoin because there's less Bitcoin coming out. That happens every 4 years. Same thing, fundamentally business has changed. Like I said, we're getting paid on a minute basis. So if I can do the calculations and I can say, well, the energy I'm using now is going to cost more than the Bitcoin I'm making right now, I might as well just take my cash and buy Bitcoin. Why would I spend more money on energy to get less Bitcoin than the market is saying it's worth right now? And so then you turn off your machines, you keep them there, you wait for it to become profitable again. Or if they're very old machines, they get shipped to places with cheaper energy like South America, or they just go to the dump and get recycled, and they die in the ASIC recycling bin.
Yeah. And I think it's such an elegant way that the entire network actually functions, because you've got, I guess, the newest and most efficient miners are able to are more resilient to those drops in price, perhaps even more resilient to the halvings. And then the older machines that are just kind of chugging along, trying to compete with the Usain Bolts, and they're sort of like, entering their sort of mid-40s now. They're finished. They can't run as fast. They've got to find places where they can actually compete because they can't play in the Premier League anymore, as it were. So it's such it's such a beautifully designed system. And what we saw during, was it 21, where China said, you're not allowed to do any more mining, and sort of 50% came offline. We saw the hash rate drop quite precipitously. And then very quickly, those ASICs were distributed around the world. It's now become apparent, from what I understand, that China's back in the game. So what's your insight into that?
I don't have much insight other than there is rumors they're back in the game. There is nation states. There are, family sovereign wealth funds in the mining game. El Salvador talks about mining Bitcoin. So the game is growing from your home miner to your small business miner to your nation state, which means they have different price sensitivities. They could just be chugging along because, like I said, they don't really care, or their cost of energy is so low because they're producing it themselves, and they're able to amortize not only the Bitcoin mine, but the energy asset attached to that mine, and able to go from energy at 4 cents, where most people are in the US, to 2 cents, which means that you can survive another half price reduction, going from 30K to 15K before you lose, your profits there. And so every time you go down a basis point in energy from 2 cents to 1 cent, you're able to survive another 4 years. And so it's this constant search for energy that has no market, energy that is wasted. And that is the nice thing about Bitcoin, is that it sucks that energy up, it uses it and puts it to market. It exports it from a local market to a global one. And that's what Bitcoin mining does really well, is it makes electricity a global marketplace, where before you had to sell to a local buyer.
Yeah. Yeah, it really is a fascinating thing, because I saw something recently where it says some of the most sort of wealthy states in the future, nation states that is, are likely to be these energy rich ones, and not necessarily energy rich in terms of sort of the petrodollar rich ones, let's say in the Middle East, but those that have access to lots of hydro or other sort of forms of energy that are abundant, that they weren't necessarily able to monetize very easily, or didn't necessarily have the capital in order to build out all the infrastructure. They've now got this incentive to do so. And then in addition to mining the Bitcoin, they'll be able to take some of those profits and then help reduce the cost of electricity, build out the grid further, provide a better service to their citizens. And yeah, we're seeing it playing out on a small scale. And sometimes I go, I really wish I could fast forward 5 years from now and see what it looked like. But it's quite obvious that these things are happening. JP, I also know that you've got a podcast, the Digital Gold podcast. Tell us a little bit about what that's about, and who you're talking to, and what are the conversations like?
So in Digital Gold podcast, I talked to a lot of guys in the energy space, guys that trade energy, guys that put together large wind farm deals, guys that finance projects in the intersection of energy and Bitcoin. That's where the main focus of the project is. I did start doing some NFTs and other things, but I'm going to bring it back for a season 2 where we focus on, back to the energy, back to Bitcoin, and why it's so, I guess, such a big change for this energy industry, and what are the opportunities that Bitcoin mining brings. So that right there is the focus of Digital Gold. It's a popular podcast per se in the mining space. It's got like 8,000 downloads. So I'm glad I launched it, but I need to get back into it. I've just been doing other people's podcasts and sharing my story about Bitcoin mining and why it's important to care about Bitcoin mining and how to get exposure to it.
Either way, I think it's cool just to have conversations, isn't it? I mean, look, I've also, my podcast is but an infant, and so far I'm absolutely loving it, having the most phenomenal conversations. And I think the beautiful thing about podcasts is they live on the internet forever. And a conversation I had recently was, if the world is going towards sort of AI and all that sort of stuff in the future, they're going to be looking back at these early conversations as being kind of informative. Like, we were at the ground floor when this was all happening. I mean, I'm not quite at the ground floor like you are, but we are, in a relative sense, very early. And if you think about, energy execs and those kind of people who are trying to find ways in which to diversify their revenue streams, or quote unquote go more green, or find other ways of being modern and innovative and progressive, Bitcoin sort of goes hand in glove with energy companies. And, sure, you might have 8,000 listeners, but the real ones that I think you want to attract are the people who are at these energy companies who perhaps don't understand Bitcoin and can't quite make that connection. Because I think for us, people who are sort of Bitcoiners, we look at it and we go, that is just such an obvious opportunity for energy providers. It's almost like fiscally irresponsible not to look at this, because So yeah, I mean, keep doing your thing, man, because I'm telling you, like, all it takes is a couple of these execs to listen, and you never know what sort of opportunities will swing by.
And I've had amazing opportunities to swing by because of Instagram and TikTok and YouTube short videos, because we can not necessarily explain in the depths of what Bitcoin is, but we capture people's attention of like, this is how much a Bitcoin mine makes, and this is how much it costs to build, and here it is in the middle of Iowa. And one of those videos got 37 million views on just TikTok, and then got millions of views on YouTube and Instagram. And that's where Dr. Phil, that's what NBC saw. And they reached out and they said, hey, can we have you on the show because of those videos? So it just shows you, when you create and you share content that's meaningful, that's has an impact, that can share people another, I guess, window into reality they didn't know existed, then you have these opportunities come by that you never have unless you create a content. So definitely recommend everyone creates content.
Yeah, that's exactly what it is. And it took so long for me to actually get going on a pod. I had some ideas about doing it as far back as a year ago, and I just thought to myself, I don't know what I can bring to the table. I don't know what my story is. Like, I don't think I'm unique. How many different podcasts are there? And eventually, a guy named Jake Woodhouse kicked me in the ass and said, here we go, 30 days, I want a podcast live. And I was like, okay, I'll do it. And I figured out, okay, my experience working in crypto publications is sort of what I can bring to the table, because I got to see how crypto actually really works. Saw some of the incentives. It was everything from, Web3 to NFTs to all of these different things. And I kind of realized it sort of just made me even more bullish on Bitcoin, because I was already a Bitcoin maxi. And then it was like, yeah, no, you are right. That's the signal. Everything else, yeah, people can play whatever games they like, but it's not money. To me, they're just companies. And, when you got a dude dancing around in a clown suit or a unicorn suit, that was the signal for me. I tried, but yeah, JP, this has been pretty rad, man. I've really enjoyed chatting to you, and I think for a guy your age, you're rocking and rolling there, and I think you're doing some really good things in this space. Before we roll out, did you have any other closing thoughts that you want to leave people with, or pearls of wisdom, perhaps?
I would say, get into Bitcoin, hold your Bitcoin, put it far away so you can't sell it easily, and don't worry about the next flashy object. Don't worry about the price every day, because Bitcoin is your ticket. It's your protection from inflation. It's your, because inflation is taxation without representation. It's your ability to own this unique device that buys energy and uses all this stranded energy across the world. And by owning a Bitcoin, you get to own part of that. You get to own part of this immutable ledger. And so I just would say to people, you're not too late at $29,850 per Bitcoin. Even buying at $70 per Bitcoin, I'm still dollar cost averaging every single week into Bitcoin, because I believe that Bitcoin is the most valuable asset in the world, and one Bitcoin equals one Bitcoin. So follow along. You can find me at Twitter is at Mining Store, at John Paul Baric on Instagram, and miningstore.com/learn to learn more about Bitcoin and Bitcoin mining.
Brilliant, man. Really appreciate it. It's been a blast. And I'll be watching and seeing how things are transpiring in your end of the world.
I appreciate it, my man.
Thanks a lot. Cheers, eh? Thanks for listening to today's episode. I hope you enjoyed the conversation and that you got some value out of it. Either way, hit me up on Twitter and let me know what you think. My handle is Dale21M. If you've got any suggestions as to people you think I should be talking to or topics I should address too, I would love that sort of feedback. Otherwise, if you want to support the show, there's a couple different ways you can do that. The first is just to share it amongst your friends and family. The more that people hear the message that Bitcoin and crypto are not the same thing, the better. And I want to help people understand that. The second thing you can do is give me a 5-star review on whichever podcast app you're using. Of course, that's only if I deserve it. And last but not least, if you want to stream sats my way via the Fountain app, I'm not going to say no, but it's not expected. Thank you so much for your support thus far. It means the world to me. I appreciate the hell out of you, and the best is yet to come. Much love, friends. I'll see you on the other side.